So we are actually saying that the next largest fund is at 2 billion. We are at 23 billion. And when you look at the entire market, we actually are holding 10% of that, and that is about 350,000 members. The return to our members has also been optimal over the years since inception. To maintain momentum in the growth of the fund assets, as well as hedge the fund against volatilities experienced in the Kenyan economy, the fund has invested in alternative assets such as real estate with the Riverine in Kitengela and commercial space in Westlands. Studies done by the Retirement Benefits Authority indicate that most Kenyans, up to 80% of people who are retiring today, retire with an average income of 22% of their last salary. This is the reason why most retirees must depend on their families for upkeep.
Pension funds are no longer a small player. As an institutional investor in this market, any person looking to invest in this market would definitely look to pension funds in general to tap capital. So recently we've had the RBA encouraging pension funds to invest not only in infrastructure, but it started with a conversation around private equity. Private equity previously was not a specific asset class. It was held within other assets with a small allocation of up to 5%. So we saw last year RBA encouraging trustees going through the motions of setting up a specific asset class to say, okay, now do up to 10%. Then we saw another move that allowed trustees in the market to invest in other alternative assets such as the exchange traded funds, which have just been launched as well on the NSE. And then now the recent move we've seen is where the RBA is encouraging pension funds to invest in infrastructure. So this conversation has just started. I think trustees are open in the market to listening to what options are there. And I think the challenge really is on private sector and the regulator to now formalize these structures that we're talking about, setting up the funds, setting up the private-public partnerships that will enable the trustees to then deploy these funds into those strategic asset classes.
I think it's a welcome move and it's very good. And in developed countries, you'll actually find that there are pension management institutes like those that basically help propagate what is there in the industry. It's not to say that you put a minimum requirement of a PhD. Obviously, if you put a minimum requirement of a PhD, you wouldn't find many people. There's no PhD on this desk here. It's just to basically make sure that you don't want to end up in a situation where you have a board of trustees, and the way the board of trustees usually operates, you may be independent like these trustees, or you may be a sponsor nominated like myself. But when you go to the board of trustees, you must work together as one. So it's only in our view that if you set a certain minimum standard, you'll find people actually behaving well. It's really, that's the way it is going everywhere in the world. So there's not really, it's not, I wouldn't look at it in a negative sense. I must actually look at it in a positive sense.
All trustees, as you know, in this country have to go for a course. I'm not sure how long it has been, but I think it's about 2 or 3 weeks. Very intensive with examination, and you had to make a minimum pass before you get your certificate. So all that has been done with the RBA, and we all support it, I think.